I just have a few slides I want to go over. Some of the, we've talked a lot about fundamentals and heard a lot about those today. I want to go over those and comment upon what that means for valuation, what value for your oil and gas rates. And then we can just summarize that for some options when you're looking at doing a valuation. So this is a slide that we put together. It shows the market pricing for Pennsylvania, New York, and New England. And Dave Spiegelmeyer, talked a lot about the pricing, and it's being largely suppressed. If you look, the sample of 3 trading points that we put together on the map shows that pricing is depressed, not just for the front month, not just for a short term, but also for the entire lifespan of the trading contracts for the indices. So if you look at that and you look where there's value in moving your gas to New York and New England, problem with that is you need pipeline infrastructure. What's happening in today's market, gas is going to the Gulf, it's going to the mid-continent, it's moving all over the country, which is just creating gas-on-gas competition. So you really need to get the gas to New York, and New England. The problem with that is you have New York in the way. Current administration is not very favorable for oil and gas infrastructure, oil and gas development. They have a moratorium for hydraulic fracturing. So it's going to be a while for that to occur until Cuomo's out of office, basically. That's a good thing for value. If you haven't had a valuation done, the gist of this slide is it's going to be a while before pricing is supported, and it's going to be a good time. You have some time for evaluation to be put in place. In this slide is a it's a partial list of pipeline projects that are on the slate in front of FERC. So this list has grown considerably over the years, which is a good thing, and yes, this will help support pricing over the long term. Also creates an opportunity for landowners beyond your oil and gas rates. This is a lot of pipe that needs to cover a lot of miles, that needs right-of-ways to do that. Right-of-way values have increased substantially over the last couple of years. We've seen them, in Ohio skyrocket, or Ohio. Ohio. All right. So that's something that this is outside of the oil and gas rate realm, but if you have land rights, this is another aspect that should be factored into the equation. We did a project for a large financial institution last year. They had 22,000 acres in New York and Pennsylvania. And we're going through documentation, and we're looking at it, and we're noticing that they have just right-of-way access, miles and miles scattered all over. And so we just documented what they were. We sent them an email and gave them a call and said, this isn't in the scope of things, but you have all of these right-of-ways. Do you want us to value those? You want us to add that on? And their first comment was, what's a right-of-way? So it was a long conversation, but we kind of got through that. Then we mapped things out and saw if they really had value or not, and went forward. But this is an aspect that can provide significant value beyond your oil and gas rates. In this slide, you can see that we talk about rig count, and you probably heard a lot of oil and gas companies that have come out and said their earnings are down, performance is bad. You may not have heard that their balance sheets are down as well. So when they're looking at their proven reserves and those values, because of the lack of activity, those values haven't increased over the past couple of years. Same thing you can say if you have oil and gas rights. If you've had a valuation done If you had a valuation done in Pennsylvania in 2012, 2013, even in Ohio, they had a spike up of 40 rigs operating in the early 2015 time period. Your case for there's going to be activity, value is going to be strong, has significantly been decreased because of the decrease in the rig activity. So you're in the same position as producers are, that you really have an asset that if you need to decrease that value, now you'd be able to have an opportunity to do so. And this is a map we put together, and we had some discussion about permitting activity in the state. It's interesting that you have pricing down, you have rig activity down, pipeline activity up. So producers have been very active in permitting. And the different colors on the map indicate the level of permitting. So green, there's been some permits. I think on the map's 5 to 24 for dark green. Later it goes into the red. There's been over 100 permits that were applied for from the beginning of 2015 till now. So, all right, if you look at the detail, look, you can't really see Greene County, you can't really see Washington County. Kind of makes sense, a lot of wells, a lot of activity there in general. You have a number of rigs operating. The problem is, if you look at a rig activity, it's way down. So if a rig is even drilling one well a month, and you have 1, 2, 3, 4, 5 rigs operating, you're not going to hit 100 wells in a year. You're not going to hit 100 wells in 2 years. Same thing, in Greene County. Same thing up in Northeast PA area, where you have Susquehanna County that has over 100 permits in place and 1 rig operating. Look in this area, Lawrence and Mercer County, you have somewhere between 5 and 50 permits being applied for. So, interesting concept. If you have a lease that was signed around 2011, 2010, 2013, somewhere between 2010 and 2013, you have leases that are going to be expiring. In that lease, you have lease bonuses that have been talked about. If you say an average lease bonus would be around $5,000 an acre, multiply that by 640 acres, you're talking about $3.2 million to renew a gas unit. If you have a lease or you have leases that are expiring from their initial term. So some leases will have terms in there that the initial term is 5 years. It'll be extended, and it'll be extended for another $5,000 payment, $2,000 payment. It all ranges, but there is possibility for a secondary term to be another $5,000 per acre payment. Or there's also language in the lease that says if there is activity on your parcel, that activity will hold the initial term of the lease, and we don't owe you the secondary term payment. So with the amount of leasing or permitting activity, the industry either thinks there's going to be a significant upturn in development, or they have a bunch of leases that are about ready to expire that then hold the lease. So we don't provide legal advice, but if you have leases, or if you're going to be, gifted leases, this is an item that would be very important for you to evaluate, because the value may or may not be there. So if you have, what the producers are doing, instead of paying $5,000, they're paying $5,000 for a permit to extend leases instead of paying the $3.2 million. So, just the issues for valuations. Current market activities, basically there's an oversupply. If you haven't had a valuation done, these are good times to be having one done. If you've had one done already, these are good times to have those renewed because of current market conditions. There is a thing called right-of-way value that has increased significantly over time, over recent times. And depending on what you need, if you're looking, the last presentation talked a lot about, are you selling or are you, holding on to it and donating it? You may need to have a full valuation done. However, you're very well, if you're looking to sell, you don't really need a full valuation. You can just, take a look at the market value, market price report. We team a lot with HBK on doing those because it's a different set of answers. There are a different set of questions that need to be answered, and our combined skills, we're able to approach that from a different perspective. So that's don't think that you have to go out and get a full high-priced valuation for your assets. That's all I have. Those are allocations.
Joe, when you do evaluation, you have 200 acres in Greene County. What objective criteria do you use to help you come to that evaluation?
For full valuation?
Yes. What do you look at?
We take a look at the geology. We look at the formation, and then we also look at like production and the spacing between the active production and where the parcels that we'd be doing evaluation on. I mean, that's starters, and then we look at the infrastructure to get the what we would expect to be produced, timing of that, where when that would hit the market, and and where that production would possibly go, where the likely interstate pipeline connections to get that to market, what that's trading at, and where we would expect that to trade up in the future.
So do you reduce it to dollar value of today, or how is it done?
Yeah, we just do it on a cash flow basis to get down to today's dollars. I mean, we go through a very similar process, if not the same process, when we do the market pricing report, but just the report itself is much more redacted, so you just get the basics.
Yeah, I have a question on your right-of-way valuation. Especially if you're looking at adjoining land, is that valuation negotiated, or is that what do you take in as consideration for right-of-way valuation?
We'll take a look at what other right-of-ways have gone for in that area, take a look at what the alternative routes are. The important aspect when you're looking at right-of-ways is, if they don't go through your parcel and take that route, what's the cost of taking another route? You have to identify that what that is, because you can have an idea, you have a good idea of what a right-of-way value, the current market is for right-of-way values. But then if you're talking about a specific parcel, you need to know what those cost alternatives are. And not just the cost alternatives, but what is the likelihood? Is there a water issue for them to go another route? Which basically says, it doesn't matter how much it costs, they're not going to do it. So we have to kind of take a look at the topography of the parcels very specifically when we're looking at that issue. The question was, in case anybody in here is, based on fluctuation in pricing, how often would we suggest a evaluation be done? We look at pricing as being just one of the factors. We typically tell people that you don't need to have another valuation done until there's been a substantial change in an aspect of the value. So, if things are pretty much, if you've had one under current market conditions or similar, until things go up to $5, and until there's 60 rigs operating in Pennsylvania or Ohio, and they're headed into that county. Until you see those fundamental changes, there's really not much of a need to do anything different. It's scattered all over. The question was, where's the best place to get the information? Baker Hughes has rig counts. Pricing in general you can get from the EIA and track that. There's a website where the bases are traded both on ICE, it's theice.com, and NYMEX has some of them as well. There's some overlap, some different with that. So, but it is a lot of different, and Penn State has a lot of good data, DEP. If you're talking about Pennsylvania, ODNR for Ohio.
Thank you very much, Joe. Appreciate it.